this index had a great run in the last 10 years. As steep as the decline is, similarly, you see the pattern of recovery. There was 38% correction in a matter of less than 2 months. Talking about Right Research's perspective on the recent correction. For the last 6 years, since we have been offering our investment strategies as Right Research, and for almost a decade, momentum investing or momentum strategies have been the type of strategies that have beaten all other types of investing strategies and themes in the Indian market. You can see any index or any mutual fund or a small case strategy or a PMS that has been following momentum has been some of the best performing strategies in the market. And both retail as well as institutional investors have now started following momentum as a theme very actively in India. We as Right Research sort of have an expertise in momentum. Our momentum strategies are some of the most subscribed strategies, and we do hold some expertise in understanding this factor. But in 2025, what we've been seeing is that momentum investing is actually underperforming the broader market. And it is also underperforming some of the strategies that are more low risk in nature. Many investors who have just recently started following momentum investing are worried that is something broken in momentum, is something going wrong with momentum investing, and they want to understand this factor deeply. The short answer to everybody's question is that nothing is going wrong with the momentum investing strategy. It is actually performing as expected. In such times of high risk and a lot of market volatility, momentum can also see sharper volatility, and the high risk nature of this strategy can also cause some stress. We'll dig deeper into this and give you more flavor about this strategy in this video. So let's start by understanding 2025. Why is momentum underperforming 2025? So the first reason why momentum is underperforming is very clear, that this is a very choppy market, right? And if you try to understand momentum, what momentum means is that we are trying to find long-term trends in the market, right? We are trying to capture those stocks which can have a long-term trend. In such a choppy market, what you would see is, due to geopolitical concerns or announcements from the US government or changes in the Indian policies, the themes and the trends are changing very rapidly. So if you are following a theme, what you can see is that themes can shift pretty rapidly in such a scenario. So if you look at this year, what you would see is, in the early part of the year, defensives and FMCG were actually doing better. Then, the market really shifted. What we saw was banks and the capital intensive sectors took a lead, and then that theme also shifted, and we saw a turbocharged rally in small and mid caps, right? So the themes have been shifting very rapidly in such a market. And momentum strategy, which is trying to capture slightly longer term trends, can also feel choppiness or churn or shifting in parameters in such a scenario. And when you are doing systematic trend following, such rapid shifts can cause slightly high churn or whipsaw patterns, which can be slightly volatile for such a strategy. The second reason why momentum is underperforming 2025 is the high risk nature of momentum stocks. So think of the high momentum names in the market, right? You would think of something like a Zomato or Eternal, right? Or maybe a name like Paytm. Some of these stocks have been trending the most. But check out their valuations, right? What you would see is, because of the high growth nature, the prices have trended so much that the earnings have not been able to catch up, right? And people are still investing in these stocks because they see higher growth projections into the future. So the high growth nature of this stock leads to higher prices, which leads to slightly higher valuations. And in times of high risk, what happens is that the richly valued stocks tend to have slightly higher correction as well. In times of high risk, people dump the highly valued names faster than the passive names. Momentum stocks can also have high beta in certain scenarios. You would see many of the momentum stocks not be really low beta, but also have a high beta characteristics. And that is why, when market is correcting, a high beta name can actually correct faster. Along with that, momentum strategies might also go to the wider market. They might look at small and mid caps, right? Along with the large caps, which obviously have higher risk. And these characteristics make the momentum strategy slightly higher risk in comparison to the benchmark indices. Now, the third reason why momentum strategies might be under pressure right now is that the macro signals are obscuring price signals. Momentum strategies, in the simple sense, look at the trend of prices, right, or historical prices. But in the current scenario, macro noises have actually come and impacted the price signals quite a bit. So if you look at early January, February, the tariff announcements that were going to come in the global market, they have actually adversely impacted prices more than the fundamentals or the actual expectations that usually govern these prices. And in such a scenario, macro noises can come and impact long-term trends and cause short-term whipsaws, which could be actually impacting some of the momentum stocks, which we would actually expect to do well despite all this volatility. Now, this drawdown in momentum and all these reasons that I talked about are nothing new. If you look at the data for the last 10 years, what you would see is, there have been various such scenarios where you would have seen such a similar drawdown or even higher drawdowns in the momentum strategy. So here we have data for Nifty 200 Momentum 30 Index. You would see that this index had a great run in the last 10 years, but the index has not followed a straight line. You would see there have been various periods of drawdowns in the growth of this index. So we've been doing some research and we'll present this data on the screen. If you look at the last 10 years, there have been, various instances where you've seen more than 10% correction in the momentum index. The highest correction we saw was in 2020, which was 34% correction in the Nifty 200 Momentum 30 Index. And recently, we saw almost 31% correction. In 2021, the index similarly saw 28% correction. 2010, we have seen a 26% correction. 2015, again a 22% correction, and there have been various other instances. What's very interesting in this data that we're going to present to you on the screen is that the amount of days that it takes for the index to go from the top to the bottom is roughly on an average around 140 days. This time in 2025, we've seen this correction, right, from top to bottom, which was actually in late 2024 to April 2025, last for almost 192 days or almost half a year. We've seen a drawdown of almost half a year. The recovery is still happening, but if you look at the historical data, something very interesting comes out, right? So if you look at the historical data here, what you would see is that the average time to correction is around 140 days and the average time to recovery is 191 days, right? If you look at the ratio of the time taken to go down versus the time taken to go up, it is roughly 2 times, right, on an average. So one big question that we get from our investors is that, okay, we've seen this correction, how long will it take for us to recover? So the past instances of all that correction that we've seen, they tell us that it can roughly take 1.5 to 2 times the amount of time it took to correct for the index to actually recover. So if you look at the chart, what you would see is that as steep as the decline is, similarly, you see the pattern of recovery. So as fast as the index goes down, similarly, the index also recovers. And it roughly takes between 1.5 to 2 times the amount of time for correction for the index to recover. There can be obviously different scenarios. For example, in 2020 during the COVID time, the correction happened very instantaneously. So there was 38% correction in a matter of less than 2 months, right? So that was the fastest correction that the index has seen. But the recovery took around 5 months for the index to fully recover. So momentum index corrected sharply in a month's time, but it took longer time to correct. But then again, the recovery time was not massive. It was 5 months compared to that 1 month decline. There's also been instances where, the recovery has been faster than the decline. For example, 2010-11, the decline was over more than 300 days, but the recovery happened in less than that time. So we've seen such instances also happen in the history of this index. If we look at the current decline, what you will see is that it's not a short decline. It's more than 190 days that this decline has happened, and it is sharp. It is one of the biggest declines that the momentum index has actually seen. Now, there is no hard and fast rule that you cannot define how fast the recovery would be or how many days would that take. But, doing some statistical analysis, very simple analysis, we expect that recovery to be roughly 1.5 to 2 times the amount of time that the index took to decline. But, obviously this is not a hard and fast rule. This is just a speculation around historical data. So obviously we don't have a hard number, but we have some great lessons from the historical correction. There can be instances when this strategy, which has done amazingly in the long term, can see steep declines also. But if you stay patient with this strategy, it really pays off. So if you look at the momentum index, it might have seen slightly higher drawdowns compared to the benchmark indices, but it has also compounded at a much larger rate compared to the benchmark index. And if you had been patient with this index, if you had held on to it during the corrections, the strategy really pays off in the recovery. And that is one big lesson that we learn from this example. So the big question, is momentum broken or is something going wrong? No, we've seen various such instances where momentum can see some correction. There could be reasons that we have listed down that are leading to this correction, and the recovery is also started happening, and might follow the examples of the previous correction that we have seen in this index. So what should investors do given this decline? What does the data tell us? The first thing the data tells us is stick to the discipline, stick with your momentum strategy. The strategy can have some massive periods of outperformance along with the short periods of risk, and only if you stick with the strategy you will see the long-term outperformance on your capital. So the first lesson is to stick to the strategy with discipline. Second lesson we get is to zoom out, right? It's short-term pain can have an impact on the investor psychology, but if you zoom out and then look at the broader performance of the momentum index and compare it to the benchmark, you would see there is a long-term outperformance. So build that long-term philosophy and zoom out in your horizon of looking at these strategies. The third lesson is to understand that we should be monitoring data and following rules instead of getting trapped in emotions. In such a volatile time, it's easy to get caught in the emotions related to seeing a sharp correction or losing your capital. But what's very important is for us to follow along with our strategy, look at the data and make sure that we are sticking to the process. And finally, it's another important lesson that if such a volatility is not suitable for you, you should actually diversify it to other factors, right? So if you actually look at a quality factor or a large cap fund, those strategies would have outperformed slightly higher risky strategies during this point in time. So if you think that you should be diversifying away to those strategies also, maybe this might be a good time for you to start looking at your overall asset allocation. I'll end this video by talking about Right Research's perspective on the recent correction. Obviously, us being quantitative, a lot of people don't understand what's going behind the scenes, right? It's a systematic process, and in times of risk, people think that something is broken or something is not working. What we're trying to do in this video is sort of help you demystify what happens behind the scenes and help you understand that nothing is going wrong, but it's the nature of the current scenario as well as our strategies that is leading to maybe a short period of underperformance. So momentum strategies do not offer smooth sailings, but they offer exceptional rewards for people who stay the course for the long term. For a disciplined and data-driven investor, scenarios like these are not a reason to abandon momentum, but actually reasons for them to double down to take advantage of the return premium. As the trend inevitably returns, those who have been holding the strategy will be rewarded in the long term. So stay systematic, stay the course, and the next trend might be around the corner.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.